Welcome back, everyone, to the program. I'm your host today, Jeff, and I'm going to be talking about a term called arbitrage. And that term, a lot of people think it's very complicated, and people like to make it sound like it's more complex and hard to understand than it really is. I'm going to simplify it today, make it so you understand, and explain how we use it at Economic Preppers to hopefully improve your standing in wealth and your purchasing power. This is not financial advice, but if you happen to become a member of Economic Preppers, you'll learn more. But first, let's go into what is arbitrage. Arbitrage, let me share my screen and we'll talk about what arbitrage means. Okay, arbitrage. Thank you, Investopedia, for the ad. Let's get rid of that. So, according to Investopedia, what is arbitrage? Arbitrage is the simultaneous purchase and sale of the same or similar asset in different markets in order to profit from tiny differences in the asset's listed price. It exploits short-lived variations in the price of identical or similar financial instruments in different markets or in different forms. Arbitrage exists as a result of market inefficiencies, and it both exploits these inefficiencies and helps to resolve them. Okay, that sounds nice and complicated, but let me try to break it down to simple terms, okay? I'm going to use the example of gold and silver, because this is one that's been gold and silver have been money for thousands of years. It's pretty much the respected view of money and the best representation of money that humans have invented up until Bitcoin. Then we start to debate about that. But we have gold and we have silver. So silver, all right, just here's a silver round. This has been considered money for years upon years upon years. But that doesn't mean that the price of silver compared to other things is consistent. So some people love gold, some people love silver, but if you look at the history of the two, you can actually look and see that there's differences in prices over time. And by using arbitrage, you can actually make a profit. So what happens here is that you define for yourselves what assets you like to be in. So if you like gold and silver, you like gold and silver. Okay, fine. So we're going to look at gold and silver, and I'm going to show you the chart. And here it is. Let's get it in the right view here. Okay. So gold and silver. This is a historical view going back to the 1850s of the ratio between gold and silver. And you can see from this chart on the right, a little hard to see. Let's see if I can't blow that up a little larger. Yeah. Okay. So currently it's 81 ounces of silver for 1 ounce of gold. The high is 121. The low was 6. I don't even know where 6 would be. Well, that's way back. That's 1980s. Really? 1980s. That doesn't seem right. I could believe it back here. This must have been a glitch or something very strange that happened in the early 1980s. But for all intents and purposes, silver and gold tend to stick between 25 and 75. Sometimes you get over 100. Sometimes you get below 50. But what you can do here, and I'll give the example, a real simple example. Let's use 50 as a good low point and 100 as a good high point. And I'll say that you can make 2 trades. You make one trade in 2010, you make another trade in around 2020. So let me drop out of here. And I'm going to use simple analogies here of a dollar bill representing an ounce of gold. Okay, because I don't have an ounce of gold just laying around today. I also don't have 100 ounces of silver laying around. If I did, that'd be hard to move around. But this equates to 4 quarters. Okay, so I have 4 quarters and I have a dollar bill. Those are, for all intents and purposes, equal. Now, if I have a marketplace now where like this represents gold and this represents silver and there's equilibrium, and then there's 100, like a penny is an ounce of silver. So 100 pennies or 100 ounces of silver equals 1 ounce of gold. Now, if I go back and I look at that ratio and I find a point in history where one of these equals 50 ounces, an ounce of gold equals 50 ounces of silver, I could take, let's just say I bought a while ago, I bought an ounce of gold. I love gold and I love silver. Just saying. Not saying that that's my opinion. I do like them both, but just say you love silver and you love gold and you'd like to acquire more if you can without ever leaving gold and silver. So now you have 1 ounce of gold. You wait for this to be, it's worth 100 ounces of silver. So now you take this and you translate that, you trade, you go to a coin shop or other ways to trade silver, but you want to have the silver in your possession be your own bank, control your wealth, and you give them the dollar or the ounce of gold, and then you walk away with 100 ounces of silver. Now, later on, maybe months, maybe years, it's now 50 ounces of silver equals 1 ounce of gold. So now you take your 100 ounces of silver, you take 50 of them, and you come back and you buy your ounce of gold back. So now you spent 50, that's gone. You bought back your ounce of gold, and now you still have 50 ounces of silver left over. So you went from having just this, now you have all of this. And all you did was 2 trades where you traded this for these when it was a good ratio, and then you traded this back to this when it was a favorable ratio. That is using arbitrage to gain more than you originally had. So now I went, instead of having just 1 ounce of gold, I had 1 ounce of gold plus 50 ounces of silver. That is arbitrage. Now, going back to the chart, you can see that if you look at this, if I had done this, say, in 2012, all right, let me go over the chart here. So if I had done this somewhere in here, let's say 2011, 2012, right in here when it's like 50, I would have had to wait till 2020, 9 years for you get to be 100. Now, arbitrage is great. Arbitrage, when it happens, it's great. But what if we had another mechanism or another asset that we like besides just gold and silver, where we could trade a third asset, and maybe we could find different ratios and watch over those? This is where we include Bitcoin. So now we like Bitcoin. We like Bitcoin, we like gold, we like silver. So now we go over to a site like priced in Bitcoin 21, and we can look at all these things priced in terms of Satoshis or portions of Bitcoin. So for here, if we look at, here's the US dollar, is 3,800 sats. But if I'm going to go into here, I'm going to look for metals. And I've got gold and silver. I've already brought up those charts. So there's gold over a 5-year, or actually all time. And here's silver. So they look very similar right now because they've been relatively simple against Bitcoin. But over time, you could see you bought, originally it would cost way more Bitcoin to buy an ounce of silver than it is today. Now it's more like 90,000 sats. It's about it's 89,000 sats for an ounce of silver today. So this is where you can go to websites and you can track the price of the assets you like in terms of the price of the other assets. So rather than just looking in terms of how much is gold or silver or Bitcoin in terms of dollars, how much are they in terms of the other assets that you like? And if you had a mechanism to swap between them all, even better. And that's what we're working on in Economic Preppers. I also want to share, there are other ways to do arbitrage. We're not going to go into that one, but you can see that just these two, typically what happens with Bitcoin is you have unstable financial markets all over the globe. And what happens is that particular country will have a different price of Bitcoin than the rest of the country, than the rest of the globe. So here, Australia, Bitcoin trades $4,000 lower than the rest of the markets. In Nigeria, it's a 62% trading gain. So what you could do here, and if you had the ability, the means to do this, you could go and buy Bitcoin lower in Australia and take it over to Nigeria and sell it and make almost an 80% gain. So let's just say Bitcoin, I'm going to say Bitcoin's 30 grand. So you could buy it for 26 in Australia. And then I go over to Nigeria, I could sell it for 62% premium. So I could probably sell it for like 50-ish, maybe 55. So I'm turning 26,000 into 55,000, and I take that money. So that it becomes a circle, right? And then I'm gonna draw with my hands. Let me see if I can find that chart. I think that might be here. Yes. So this is an example of a 3-step arbitrage. So you go from step 1 to 2, 2 to 3, and then 3 to 1. So for example, gold to silver, that's gold is 1, silver is 2, silver to Bitcoin, and then Bitcoin back to gold. So that would be a 3-step process. You could put any of those 3 assets in there. In this example, let's just say US dollars to buying Bitcoin, to buying gold, and selling gold back to US dollars. So that's in one way to do a 3-step arbitrage. What we're looking at is more of a 2-step process where you never leave the assets you don't like to be in. You translate your assets over, you translate from this stuff, which we don't want. This is the fiat currency, which is losing buying power. And you trade it for assets like silver. And I'll use this wallet to represent Bitcoin, but your Bitcoin. And so you have silver, gold, and Bitcoin. And you're looking for price discrepancies or arbitrage opportunities between all three. So you wake up one day and you say, oh, look, gold's up 10%, silver's down 10%. Maybe you decide to move some gold to silver. And we're looking at opportunities to do that and have mechanisms to do that so you can be in the assets you want to be in, but also change your allocation so that you're making a benefit because the market has different pricings. And you see this all the time. You see, like, gas prices in your town will go up at a different rate than, say, the price of eggs or the price of milk, or even items in the same store will go up at different rates. That happens. That's natural arbitrage. So arbitrage is just a discrepancy between the rates of price changes. And sometimes it's the price thing. So imagine if you went to a flea market and there were collectibles there. Let's just say Pokemon cards, right? Your kids love Pokemon cards. So your son basically tells you that Pokemon cards, they're like $3 each. Rare ones are worth way more. But you happen to know which ones are kind of rare. You're at a flea market. You see all these cards, they're $1 each. So you know you're getting a bargain. And then you see some really rare ones and you're like, okay, that's one that's going to be worth a lot. So you buy them for a couple bucks. And we all love getting deals at yard sales. And then we could go to the card shop and trade that $50 card in and get our $50 back. And say we spent $50 on all the cards, and then we wind up, and with one card we get the $50 back. So now we have all the rest of the cards plus our $50 back. That's another example of arbitrage. So that's something that we look at Economic Preppers, and we're working with different companies like Priced in Bitcoin and other things that are out there to make it available in the marketplace. And let me share one last thing here before I close out. So we're going to be at the Silver Symposium. And that's ticking across the bottom. We're going to be there at the end of September and early October. We're one of the sponsors. And let's see, featured presenters, you'll see Patrick is going to be there, the MC as well. And we're going to be one of the sponsors of the event. We're going to, if you see the Economic Preppers wallet, like I just held up earlier, one of these guys, and they're selling fast. And you can get those for only $45. We just ran out of the Bitcoin branded one. We still have a few Litecoin branded one, but we're probably going to be buying more. Okay, we're probably going to have to get more, but if you want a Litecoin branded one, act now. You can get it for $45, and we'll ship that out to you in a couple of days. You'll have it, and you have a great wallet that will allow you to safely secure your cryptocurrency. But we will be talking about this not only will we be talking about this in Las Vegas, but we'll definitely be talking about this on our course. And the course should be out. I know we keep talking about it. The course on how to become your own bank and how to live in outside of this system, but in a system like this or like this, so that you can live, arbitrage, pay your bills, all that good stuff. Hold on to your wealth, hold on to your buying power. That's what we're working on. That course will be available very soon. We're also offer a deep discount before the Silver Symposium event, because we want to get feedback. We want to get people to see it. As we roll out the classes, there's going to be probably 40-ish videos that we're rolling out on all different topics, on all different silver, gold, Bitcoin, all different ways to manage things, how to go into a coin shop, and you name it, it's covered there. And if we don't have it covered, we expect you guys to tell us, and we'll make another video and add it to the course. So stay tuned for that. It'll probably be out next week. In the meantime, if you have any questions on arbitrage, please join our free Telegram. All right. We have Economic Preppers as a free Telegram. You can join there, ask a question. That's perfectly free. And we're usually there. One of us is there each day. And also consider joining our Patreon and membership. But we'll be talking more about that stuff as we get to Vegas. But if you're interested in learning about the course, learning about the AMAs and how to ask more questions and get more coaching and education on how to manage your silver, your gold, your cryptocurrency, how to get out of the dollar system and get into a system that does hold your wealth and where you can take advantage of these opportunities like arbitrage, we're here to help you. All right. No, not financial advice, but once you become a customer and a client, the relationship changes. So lots said today. I'm going to close the door on the show, and I will talk to you guys soon. But until then, be prepared and not scared, and we're here to help. So I'll see you next time. See you on the next video, and I'll talk to you soon. Take care.